Hello guys, hi, welcome back to my YouTube channel. My name is Vinod Kumar, retail investor based in UK. Today we're going to talk about 3 UK stocks which you can buy in July 2020 and hold it for next 2 years for a easy 50 to 75% return. Okay, let's get to some of the screens I've loaded for you guys. And also, so the key objective is to talk about these 3 stocks which you can buy. Second thing is how is the company performing for the last 3 years? We'll have a look at that, and also how the pandemic has also affected these stocks, and what these stocks can perform in the coming 12 to 24 months. Plus, at last, I would also show you my trades on all of these companies which I done. Okay, the first company we're going to talk about today is BOOHOO Group stock. Okay, so this is listed in UK stock market. If you look at the stock performance for the last 1 day, it's trading around £2.17. Let's look at a 3 months chart for this stock. I will quickly explain why the stock has taken a massive dip. So if you look at a 3 months chart, I think the stock had run up quite a bit from initial levels of £2.40 to around £4.30. So yeah, that's like almost a 100% run in the last 3 months. I think since then it has lost another 50% or came back to the 3 months levels. So if you look at a 1 year graph for the stock, and as you guys can see that, before the pandemic hit, the stock was trading around 330. I think at the lows of pandemic, it was trading around £1.40. And since then, if you look at it, I think people who have invested at March lows, the stock would have given a 2x return in quick succession. I think the stock, it's a decent stock. We'll quickly look at why it's a decent stock in terms of their revenues and profits. But I think the reason for this drop, again, as you guys know, every stock took a hit in pandemic. And the reason for this drop, let's quickly look at the reason for that drop. This BOOHOO stock is down primarily because of issues with the UK supply chain and how they treat the staff in terms of minimum daily wage not being paid, and also not a safe environment for those guys to work. So first of all, I'm very sad to know about that. But again, they own a lot of smaller retail chains who kind of supply their lot of products. So, and again, I don't know how this was not noticed so far, but again, it's came to public awareness now. And again, today, I think yesterday, there's a news that they've they found some independent review body who will investigate this. And I think, according to me, there would be, if they're in fault, they should compensate those people. And also put some new controls in measure so that doesn't happen again. So those are the 2 things with the current issue, with the stock has taken a down hit. Quickly jumping on to how they're performing. So this is for me one of the key reasons, not just one negative news. If you look at last 4 years for BOOHOO, so in 2017 they made a revenue of 300 million, 600 million in 2018, 900 million in 2019, and 1.2 billion. So sequentially they're going 50% every year. I think there was 100% 17 to 18. So I think if you can show me any other company in UK growing at 50% rate every annually, it's very rare. So I think you can see that I think the projected was previously, let's assume if the pandemic was not there, for them to grow at 1.5 billion. But again, because of pandemic, I don't think they would hit those numbers. So as you can see that it's sequential growth of 50% every year. And if you look at analyst rating for this particular stock, nobody says sell. It's a strong buy or a hold. I think a couple of them or 3. There's not even underperform, so it's just hold. So that's the reason. It's a good company, 50% growth every year. And I think it's only primarily down because of the news which I suggested about. Let's quickly look at my trades with BOOHOO. So again, as I said, I think I was initially in at last year and I got out without making any money. But again, I kind of missed out on the rally, as I showed, going up to 400. But I have bought back now. I think I've started buying yesterday evening and this morning. My average price is around £2.20. I hold around 3,000 stocks currently. So that's my investment on Boohoo. And again, my returns expectation or ROI for this particular stock, looking at meeting the next the previous high, which is around 400, and my targets are like probably 12 to 24 months, similar to all of my other investment. The second stock which I want to talk about is today is CINEWORLD. And again, people who live in UK probably know what CINEWORLD does. I think they have quite a lot of venues, and also they do have a subscription model every month for people who wants to not pay for every individual ticket what they buy. So it's around £18 a month. So I and my wife, we use CineWorld subscription, and also currently, the last 3 months movie theaters are shut. But again, let's quickly look at what stock is doing. It's trading around 56p per share, and if you look at probably a 5-year graph for CineWorlds, it's always used to trade around 350 or 3.50 per share. I think since the pandemic hit, I think it's literally went down to around 20p. I think there was a chance of the company going bankrupt also, and again, which didn't happen. Good for the investors who had invested previously. But again, I didn't buy at those levels, and I kind of wanted to see, wait and watch in terms of what they do, what government support for CineWorld. I think currently two reasons why the stock had run up. If you look at a 3 months graph, the stock had run up to, if it loads quickly, it's not loading. Sorry, yeah. So if you look at a 3 months graph, the stock had run up from 18 to sub 18 to around £1, which is almost 4x in a quick short span of time. It's because again, it's the recovery play that they would come back and open it. I think since then there are two news which kind of hit the stock badly. One is I think they were previously planned to open on 1st of July. But again, they didn't get a go ahead. So I think the current plan is around 31st of July. So I think as soon as they can reopen, they can make a little bit more money and people coming and watching new movies, I think the stock should be okay. And the second news which is driving the stock down, CineWorld was planning to buy Cineplex for around $2.1 billion deal. So you can see that I think before pandemic hit, they wanted to buy a Cineplex for 2.1 billion. And again, I think the funny side is if you look at the market cap this morning, it's around 762 billion. So it's 1/3 of what they were planning to buy. And fundamentally, I think nothing changed. When I say nothing changed, in terms of the number of venues they have, the screens they have, their staff and so on. So everything is there. It's just that people are not going in to see the movie because it's closed, and also how people will be feeling safer once it's open, but it would take its own time. And again, it's one of the major players in UK for cinema. So two reasons why I'm invested in it. I think I like the business model in terms of subscription for quite a lot of people who use subscription model. I have my friends who use them, and also it's the biggest player in UK for cinemas. And again, maybe not 2-3 months where there are not movies are being made, but again, movies will come back, people will go to see movies, and then their revenues will pick up. And again, with regards to the still locked in, with regards to their legal spat with the cine. I think the company name, let me get it right. It's the Cineplex. Will take its own fold, I think. And again, if you are planning to buy a new car, let's assume, and because pandemic hit and you don't have same level of liquidity, you may not buy it. And again, similarly, it's the same kind of subject, but again, at a massive scale. It has legal implications, but again, I'm thinking that they should be able to get to a deal with these guys soon. But on a longer term, people will watch movies, revenues will go up, and there is a chance that this stock will give you 1x or 2x if you are holding for 12 to 24 months time on a positive side. Okay, with regards to my holdings, I have bought this share this morning, made a trade this morning. I hold around 8,091 shares, I think with an investment cost of £5,000. So again, as I said, I always wanted to buy this stock, but again, it was always at a very high price and it's at cheap multiples now. So it's a good investment for a longer term return. So that's the second stock, but probably let's say quickly jump into their revenues, because that's how the company is doing. Let's keep the pandemic aside. 2016 they were making a 1 billion revenue. 2017 close to 1.3. Then 2018, they can see that there was a 3 billion jump, and then 2019, 4 billion. So they're making a 4 billion revenue every year. So if you look at the current market value, it's around 762, which is like not even not even one fourth of their revenues what they were making. Again, as I said, that's why it's in cheap multiples. So it's a good investment, and again, I'm pretty sure they can hit back to the previous revenue levels in 2 years' time, so which would take the stock higher, barring there's not any more pandemic issues and so on. The third stock we're gonna talk is EasyJet, and again, I hold American Airlines, in US stock, which again a recovery play. Two reasons why I bought EasyJet. I'll tell you in a quick minute. First one is looking at the stock. It's trading at around £6.59. If you look at 6 months chart, which gives an indication, before pandemic, the stock was trading around £15. At the lows, it went down to £4 stock, so it lost like around 70% of its value. But again, from there on, because again how UK managed its efforts in terms of COVID, you can see that the stock had gone back up to around 9.23. Since then, the stock has gone down again. Worry about second wave, as well as a lot of flight being cancelled, which means there's not much revenue. So EasyJet news, quickly looking at it, again, they may need to pay quite a few, people who booked with them previously between March to, now. And then also people who are cancelling, or the flights which got cancelled now, which they need to refund. So there is some money which will still go out. But the positive side, they have started flying people. And again, people whom I talk to in my colleagues or friends, they're all traveling to Spain, Italy, somewhere in Europe, from UK. And again, you can't get a flight ticket. So that means demand is there with the whatever number of seats they can sell. And again, this is a recovery play, primarily EasyJet, and I think it's one of the biggest carriers in UK, other than British Airways, of course. Its market cap is 3 billion, but again, if you go back 4 months ago, the market cap was around 12 billion, so it has not around 9 to 10 billion in value. And again, let's quickly look at what I hold with EasyJet. And again, this is a stock which I bought end of last month, around 291 shares, around £2,000 in it. And again, this is a recovery play primarily for 12 to 24 months. And again, if there's not much impact on pandemic, people start to fly back in, let's say, 2-3 months time, there is a very high chance that the stock would perform. So these are my 3 stock picks for July. If you're investing in UK stock market, there's a good risk reward. And again, as I said, if the stock go further down, there's always a chance, you can average and wait it out, because these companies are not going anywhere. And if you have a longer term view, I think even 2 to 3 years is not a longer term, but still you can get a very good return on investment, buy it and forget about it for 12 to 24 months. As similar to my other stocks, which I do for 2 years, it gives you a handsome return at the end of it. Hope you like this video. If you do, please do like, as well as subscribe, because that would motivate me to create some more content on all the shares I own currently, as well as provide you my view on those companies. Thanks for spending this time with me. Take care. Bye-bye.